Okay, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to take a look at AREB. Okay, this is American Rebel. As you can see, it had a massive day today, up 17%, and it just did a reverse stock split. So really, really interesting stuff to cover today. We're going to break down the chart. All right. You guys can always email me too for a one-on-one Zoom coaching session if you guys are ever interested at exactlytrades@gmail.com. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now we're seeing big news, okay? The stock jumps on a massive 1 for 25 reverse split, and it's a hot topic among traders on Tuesday after the safe manufacturer and self-defense company underwent a reverse stock split. Now, that reverse stock split saw the company consolidate every 25 shares of the AREB stock into a single share. The reverse split went into effect before markets opened this morning, and this is issued and outstanding shares decreased from 16.9 million to 677,000 shares. Okay. Now, this right here is why so many people are interested. Okay. This is a small amount. There's less than 1 million shares out there, guys, to purchase and own. And the stock is relatively cheap, not on a valuation standpoint, okay, but from a dollar cost perspective. All right. It's under $10, so someone, let's say with $5 million, $10 million could technically go out there and purchase all of those shares. Now, in full disclosure, I don't own any of this stock, so I'm not trying to pump it or manipulate it, but rather just give you guys a nice viewer request, as this one has been requested a lot lately here in the comment section. Now, one thing that investors will keep in mind is that this doesn't change the market cap of the company, and it won't alter the stakes that shareholders had in the company before the split went to effect. But why did AREB go through a reverse split? Well, the reverse stock split has allowed American Rebel to increase the price of its shares to avoid delisting. Prior to the reverse split, the company's shares were trading at 19 cents apiece. That's well below the minimum bid of $1 per share required to list on the NASDAQ. Now, I mentioned this in my last video. Okay, I covered that. Hey, they're coming up, and there's a huge delisting risk. All right. Now, oftentimes this is what you'll see happen. All right, is you'll see companies do reverse stock splits, to avoid delisting. Now, following the reverse stock split, AREB stock is seeing heavy trading today, and that has some 5 million shares on the move as of this writing. For the record, the company's daily average trading volume is closer to 52,000 shares. Now, the stock was up 13.8% in the morning, and it closed over 17.8 over 17% by the end of the day. Now, retail is very interested in this one. There's only a small amount of stocks available. Again, less than 100,000 or less than 1 million shares available. And so, if people aren't selling, okay, that's going to drive the price higher, right? And if people are coming in and putting, thousand, stock order bids on the book, 10,000, 100,000 stock order bids on the book, that's going to manipulate the price a lot. And this thing could run up massively very, very quick. Due to the amount of shares that it has available for trading, okay, essentially the float. So that's one thing that has a lot of retail's attention, is just the simple fact of, how many shares is out there. Again, it's about 677,000. Very, very interesting. Now, they also recently announced new value line safes, and they highlighted their Q1 results in their last earnings report. So, there is some stuff that they're doing, all right, really trying to gather attention and convince shareholders that, hey, maybe this is a good investment, and, putting out some new products there as well. Now, we're also going to use today's sponsor, Simply Wall Street. There's a link in the description or pinned comment down below. You guys can get a 14-day free trial and up to 40% off for the first 100 people that join. And what it does is it gives you fundamental analysis, right? So if you're not a professional, you can go to Simply Wall Street's website, or you can go to their app and download the app. It's a really amazing platform. And if we take a look at the risk analysis, all right, earnings have declined by 16.5% per year over the past 5 years. It has less than 1 year of cash runway. It's got a highly volatile share price, and shareholders have been substantially diluted. And that's essentially what they're talking about with this reverse split. and different things like that, different forms of dilution. Okay, now if we look a little bit more and dive deeper into it, we can see that the price to sales ratio versus its peers is actually making this stock a good value, right? AREB is a good value based on its price to sales ratio of 0.3 times compared to the peer average of 1.2 times. And this is the type of information that you're going to get from Simply Wall Street. And then it's also going to give you guys some nice visuals, right? We have a nice graph here and we can see American Rebel, and then we see CTech Ventures up here, and we see the peer average at 1.2 times. And so this is kind of how they come up with these valuations. Again, that's using Simply Wall Street. It's a really great platform that I've used for a while, and I'm glad to say that, I can have them as a sponsor and you guys can get a discount. I had to pay full price, but it's really not expensive either. Okay. It's less than 200 bucks if you use the discount and get the whole year purchase. So very affordable in my opinion. Now, let's take a look at the AREB stock structure post split. All right. Now, we're actually approaching a very, very key level right around here, which is going to be 591. Okay. The stock was able to get above there. But what I mean by bullish above is that the stock needs to flip this to an area of support from resistance, and we need to be able to push higher. Right. Or if we need to just really just blow out and, continue heading higher and stay above this 591 level. Okay. If we can do that, then we have the chance of getting, a major retracement, a 100% retracement up to this 762 price level. And if we're able to break out past 762, we have bullish price targets of 884, 948, as well as 1040. Now look at the pattern and look at the structure we have forming. We have a nice descending wedge, falling wedge right here, whatever you want to call it. And if we do get a breakout of this pattern, it should take us up right around that 850 to 884 area. And if this thing really wants to continue running, that's when we can get to that 1040 area as well. Now you need to be mindful and cautious. Okay. We are overbought right here at the moment on the daily RSI. Now, just because something is overbought does not mean it can't go higher. Okay. Just like when something is oversold does not mean it can't go lower. If you take a look here, we were oversold. Okay. Oversold on the RSI. And then we came down and we actually went just a little bit lower later and actually formed a bullish divergence. Now, a bullish divergence is going to be when the stock price is doing something different from the RSI. So you can see at this point, what we're doing here is creating higher lows on the RSI, but the stock was actually relatively flat in this area and just creating equal lows, right in through here. All right, and then we see that we actually finally just got some bullish divergence to play out, and we saw a nice move to the upside here. So we're going to see if this momentum can continue. All right, 591 is that key level, guys. We really need to stay above 591. 538, 485 are going to be also some key areas that we want to try to stay above. If we break below those levels, you need to be cautious of a look above and fail. Okay, this is also known as a false breakout. And a reason that a look above and fail is going to be significant is because this is going to show you guys who's in control of the price action. Right now, at this specific opportunity, bulls have the full advantage to really show that they're in control and push price up higher. And if they don't take advantage of that opportunity and we look above and fail, and come back down into this range, that's actually going to be a bearish signal and show you guys that, hey, bulls had the chance for a breakout retest push higher. They didn't take advantage of the opportunity. The people who are really in control of the price action are the sellers, and it's going to be bearish and indicate that we could come back down and retest this demand zone just above $3, or potentially even break through that demand zone and try to head lower to the bottom end of this, bottom trend line that we have here. Okay, so hopefully you guys enjoyed this video. If you did, smash that like button, subscribe to the channel. If you guys are new, let me know your thoughts on AREB down below. Also, you can email me again for a one-on-one Zoom coaching session if you want to ever go over, some of the different technicals that I use. How do I come up with these technicals? If you ever just want a little coaching session, feel free to email me. All right, I've been doing a lot of those lately, and I'd be happy to help you guys out and work on setting up a time that we could do one as well.